Welcome to Keiretsu Forum Presents. My name is Randy Williams. I'm the founder and CEO of Keiretsu Forum. We're fortunate to be the largest angel network in the world with 46 locations in 3 continents. Every month we bring you a program to hopefully inspire, but mostly to educate you in content-rich concepts, ideas, themes, trends in the marketplace. Today my guest is Manav Singh. He's a founding partner with SOAProjects. And our topic today is uncertainties facing startups. So why don't we do an introduction about you, Manav, about your esteemed background, your firm briefly, yourself, and then let's dive right into it.
Perfect. So thank you for having me here. So I started SOAProjects around 10 years ago. The idea was very simple. I was in the Big Four, left the Big Four, joined the industry. When I joined the industry, there were a lot of consulting companies, but not a company that the model was not where you could go and trust somebody. So the trust factor was not there. So the idea was hiring from the Big Four. Work-life balance is a very big thing in SOAProjects. So work-life balance, hiring from the Big Four, and the rates are a little bit lower, so everybody goes home happy. So people get more paid, people have work-life balance, clients pay less, and there's a stability and a sensibility that SOAProjects will help you kind of thing. So that's me 10 years ago. Started this, came out of the Big Four, and it's been great. It's been good fun. Right place, right time. Silicon Valley is the best place to be. And
well, you're a global company now, and you have over 230 employees. And so launching right into this, this is a political year, and you have some great insights about trends and uncertainties because you look at and you view and you, more importantly, interface with VCs all the time. Obviously, Keiretsu Forum is an angel network, but we're going to be talking a lot about VCs and what they're experiencing today. But we're also filming in June of 2016. Ironically, our president's in San Francisco today. Fundraising, of course. But it's a political year. So what are some uncertainties there that's driving the economy or lack of traction in the marketplace with startups?
So going back in history, coming to the Bay Area in '97, so I always tell people this, that it's not rocket science, it's a simple, I think it's a numbers game. We saw a 2000 bust, we saw a 2000 correction, and I think we're calling it a 2016 correction. It's every 8 years, it's always before the, the political uncertainty that comes in. So I think that's the reason we're seeing a little bit of a slowdown. I'll jump into the IPOs. IPOs is something that's very dear and near to me, and I always tell people there's a last year, by this time, there were over 30 IPOs. This year, maybe 2 and 3, keeping some small little biotech IPOs. But that suddenly brings a perspective in life that how from last year to this year, the economy is suddenly slowing down. The unicorns are no longer unicorns. LinkedIn was one of the best things, or the company that came up in the Bay Area. Their stock, I think, went down by almost 50%, but they got acquired by Microsoft. So I think we will see a lot of those happening right now. But what does that do to early startups? So I think what that does to early startups is the money gets tighter. And I think that's where Keiretsu and other angel investors, I think, are in the right place at the right time.
Now, VCs have a ton of money, especially the tier ones. So what are they keeping their powder dry for?
VCs have a lot of money. Actually, the fundraising for VCs have been amazing in the last couple of years. I don't think I've ever met a VC who says, I don't have money. I think they have more money than they ever had. They, I tease people, from hundreds, we went to millions, and now nobody talks less than $1 billion. Every IPO, if it's a great IPO, is over $1 billion IPO, right? So VCs have a lot of money, I think, but what VCs are seeing the slowdown, because there's not been that much IPO, there's the unicorns have kind of like slowed down of the world. So I think what VCs are now trying to do is invest into companies that they've already invested into. So they're doing more of C's and D's right now. Companies, they want to give their own companies a little bit more runway, so that these companies can last a little bit longer and go towards the end of the 2016, 2017 to see how it happens. And I think the VCs are also looking at a lot of, they're funding companies in mind that they want exits.
Now, we at Keiretsu Forum, we've had now over 800 fundings the last 16 years. As we alluded, we're global, and we see fundings all over the world. But most of our exits are strategic and or M&A. We had a wonderful NASDAQ IPO, but it was all of a year and a half ago. And so we are not looking toward the VCs. We love the VCs. We love the whole ecosystem of capital there. We like, factoring. We like lines of credit. We like venture debt. We want capital for the entrepreneurs. But what we look at an exit at Keiretsu Forum, we look at strategic money, and we look at, hopefully, an exit with a friend or foe. Hopefully, it's a friendly, strategic partner. So let's get back to VCs for a moment, and then we're going to drill down on where the money is for entrepreneurs. So you're alluding that the VCs, especially the large tier ones, are keeping their powder dry, supporting their unicorns, if they're still unicorns, right? Because obviously, we've seen the valuations drop. And I don't like terms in the marketplace, even though I've been doing this for 25 years, but the large companies have gotten larger capital and maybe gone through 3 or 4 major iterations and rounds. They've gotten over 150, 200 million up. So call it what it is. So they're coming back to well. And if they're meeting their milestones, and if they're getting, and they have meeting their hockey stick and or revenue numbers, they'll get capital. Will they not get capital in many circumstances with some of the large tier ones?
I think so. I think so. The tier ones are looking at the hockey stick. If you can make revenue, if you can generate revenue, if you are at least somewhere near break even, I think the big guys or small guys, I think all VCs will support you and give you money. But I don't think the VCs are now, the whole idea of, hey, we've got 10,000 followers, we don't make a dime, and give me another $100 million, I don't think that will happen anymore. Right. So I think that the days of Twitter going public with no revenue, or companies saying that, oh, you should fund us because we've got 20,000 people following us, I think those days are gone. I think VCs or angel investors, I think, are now looking at companies and saying, how will the money come in? Where are you, when is your first generation of product going to be ready? Is it going to be 12 months, 24 months, 36 months? Another thing I think everybody is now saying is that how, the whole idea is coming back, that how do you sustain yourself? Will you be able to sustain yourself? So the gourmet lunches, the sushi chefs coming in to cook fancy meals, I think you will see a slowdown with startups with all that. So you will see a little bit more reality check.
So the Twitter 15 or LinkedIn 15 or Facebook 15, where new employees come in and gain 15 pounds, or you're cutting back on meals now?
Well, I think the meals is a great idea.
Keeps the employees
being a finance guy, I can tell you, meals are an amazing idea, and we give meals in SOA projects. The idea is very simple. You have an employee leave. It takes 2 hours for that employee to go get meal, eat in a sandwich or eat in a place, come back. You have meal there. First day they'll sit in the cafeteria and talk about their families for an hour. Next day, 45 minutes. Next day, 30 minutes. The minute you see, they'll be taking the lunch and going back to their desk, and they'll be working. So more production.
Right. So you have a ton of employees here in the Valley, and obviously you're a global company. So can you give me examples of, obviously I don't want you to name names, or please do name names, of companies that are pulling back the reins because they are running out of capital from the VCs and they're not meeting their milestones. So what do those companies look like? Are they too many engineers? Too many dreamers, not enough sales and marketing, not enough go-to-market strategies, or is it lack of revenue?
I think you've hit it absolutely on the nail. I think too many smart engineers, great ideas, smart engineers, but yes, marketing and sales is a struggle with almost every startup we've gone into, across the board. And VCs are looking for you to make money, and the VCs are looking for you to generate revenue. And I think you're absolutely right. It's just great ideas. 20 years ago, somebody told me I'll have a battery-operated car. I would have laughed at him, but now I have the Tesla. Great ideas. But I think, yes, all the companies you will see will hold back on things. With fundings not coming that much, I think you will see the companies becoming more strategic. The whole financial planning side will now kick in more with the companies, that how do we sustain what we have? So companies burning money will have to re-correct themselves.
Okay, pearls of wisdom. So advising, because you have advisory service. You have 5 channels or 5 verticals in your business?
We've got 6 verticals on our business.
What are they?
One is our technical accounting IPO practice. Technical accounting, with God's grace, every year there's a new thing coming up. This year there's revenue recognition. Every company. So this is a good one actually for early startups to start thinking in regards to revenue. For example, if you're a hardware software company, revenue recognition is changing. So how revenue recognition will help you, or how you're going to recognize revenue going forward is a major thing. So that's one of the whole revenue recognition, SEC reporting, technical accounting, advisory services. That's one. Compliance, SOX, and internal audit is one. IT security, IT audit, ERP implementations, NetSuite, things like those. NetSuite, so we're talking about cloud now. Everybody's going to the cloud. So NetSuite, Workday, those are our special, Coupa software. These are our special people that we work with and work in. We have a very interesting advisory practice called the risk advisory practice, where we do distribution audits, royalty audits, licensing audits, forensic accounting. So that's one. And then we acquired a company called Alchemy Search Partners. Believe it or not, even in the economy, the way it's going, there are no good accountants out there. So when companies come to me and say, we need a CFO, we need a controller, we need all the way down to APA, RGL person, I always tell them, the good persons are working. If you get a resume, that means the person's not good and he's looking for a resume. But so this Alchemy Search Partners was a great addition, and we're helping our companies. And we work very closely with the VC world and angel world, because whenever you fund Series B, Series C, you want your money to be taken care of.
Right.
You want somebody to sit behind the CEO and say, hey, this is how much money you have and this is how much you can spend. So that was a great addition with the Alchemy Search Partners. So those are the different lines of business we have. And then with people like yourself and Keiretsu, we started the Hatchery Group. Hatchery is an amazing group. I've been a startup person in my life. I've started a company and sold a company. When I started my company, I went to my own bookkeeper, my own tax guy, my own somebody else, and then rented a CFO to put everything together. With Hatchery, we've brought everything together in one place. So bookkeeping, accounting, tax, rent a CFO, all in one place, everything in the cloud. So we actually tell CEOs of early startups saying that when you start raising money, call us. Care about how you're going to make money, how your product is going to develop. Forget everything else, we'll take care of it.
Wonderful. Sounds like we could refer you a lot of business. So getting back to topic, uncertainties facing startups, the funding gap. So we at Keiretsu Forum, we fortunately have a footprint around the world, and we are giving many startups capital, but generally we have our validators revenue. So we've always, that sweet spot, we're not seed, we're usually with a company that has customers that we can validate. And so your clients, are they typically after seed, or, I mean, you mentioned the Hatchery, or are they all the way up?
All the way.
Okay.
So we've got early startups and 5 engineers in a room with an idea to major, all the biggest, largest public companies in the Valley.
So let's talk about a company historically would have gone to a VC. Okay. Can they approach a VC right now? Are you actually saying they're out of the market for a while?
Again, VCs are looking at the same thing that I think Keiretsu and other angel investors are looking. VCs are not looking for unicorns. VCs are not saying that, oh, you have this brilliant idea, come to us. I think now VCs are also tightening up their belt and saying, okay, how do you make revenue? I give you money right now. Are you 12 months, 24 months, 36 months? Show me your hockey stick. Show me where the money is going to roll in from. Show me what clients, what kind of clientele will you have? So no offense to companies that went public a couple of years ago that had one product, one idea. You will not see a lot of one product, one idea companies getting a lot of funding. So VCs are now, and I think VCs now want to see that, how the money will roll in.
So getting back to topic, I fortunately travel the world. I've been to almost all my chapters, close to 40, but wherever I am, in fact, I was just in India, in Bangalore, the Wall Street Journal was interviewing me. They're all talking about the bubble. And the bubble doesn't affect us because we are below this VC funding. We're trying to have our companies move toward strategic money, move toward an M&A. Are you seeing more of those companies? I won't say we love the ecosystem of capital, we love, VC money, but do the startups need the VC arena?
So I'll put it in 2 different ways on this. If a person has already, VCs like continuity. You know, if you're somebody who they funded and you sold your company to the next big giant for 300, 200 million, and you go back to that VC with an idea, the VC will fund you.
Yes.
Right? But if you are somebody who is not known to the VC and you have a brilliant idea, VC is not going to fund you at this time.
Yes.
So at this time, that person will have to come to people like yourself and other angels and say, this is my idea, help me out.
Yes. I remember I took a friend of mine, Peter Jackson Innerwear, to visit another friend, was Mike McCaffrey. He was CEO of Robertson Stevens. This is going back probably 18, 19 years ago. And I remember the meeting, it says, well, what do you do, Peter? What does Innerwear do? And, you know, talked about value proposition. He said, well, who are you funded by? And he said, well, Kleiner Perkins. I said, who? John Doerr is a lead on it. Why didn't you say that? So I picked up the phone, called John, and then I think they got funding within the next 2 or 3 weeks. So it's, yes, obviously that pedigree needs to be there, but those relationships are important. So you're saying if a VC, if an early stage company doesn't have relations with VC, it's harder than ever to get VC funding.
Yes.
But why would they want VC funding in this environment? When you have capital out there, again, a lot of capital, with angels. And I don't want to be disingenuous. I want the best for entrepreneurs because I win, myself as an investor, I've made 53 investments at Keiretsu. I want an exit. An exit can be VCs, but it's not always VCs.
Yeah. No, I think for early startups, I think angel investors in Keiretsu is the right place to go right now. And I think you will see a lot of those coming towards your side right now versus going to the VCs. Yeah, so I think anybody who comes up with an idea and has, I think you guys are looking at the same thing as VCs are, that how will you make money? I think the days of the unicorns have disappeared, I think.
So getting back, you have obviously tons of employees. How many companies are you representing? Are you representing 1,000 companies now?
I would say over 200 plus in the Bay Area.
Okay, 200. Those are what stage? Are they
all stages?
And are they all complaining about capital? What are they complaining about? What keeps them up at night? What is the concern above me on, you know, obviously revenue and customers? What do they have?
Well, I had a meeting today with a client in the afternoon, and this was an amazing meeting. 2 years ago, this client wanted to go public. They had the money, they had the revenue, but things didn't come together, so they missed that window. Now, the meeting I had with the client today was that should we carry on with that S1 on the shelf, or can it and let's do it again later on. So I think there's a lot of companies that are sitting on that shelf, or there's a lot of IPOs or S1s that have been written and are sitting, and I think there'll be a floodgate. But when that floodgate happens, I think that's dependent on, you know, the politics and who comes into power and who becomes the next president.
Right. Capital around the world. Are you seeing more capital in other areas, or is it still it's very robust economy for it here? Number one, and number two, is your companies, are they located here and they're global, or are you representing clients all over the world?
Most of our clients are local who have global presence. And I think that's how we started the whole thing, that we are here for you. Kind of
I mean, they're looking at Chinese money. I mean, it's always interesting to me about where people are looking for capital and how they actually, if they get it, and a lot of them don't get it. But tell me where other sources of capital you see.
I think we are still seeing Chinese money coming in. We are seeing Korean money coming in. Recently, I met a very great, a good VC firm, and I didn't know where they started from, but they are an offshoot of Deutsche Telekom. So now even Deutsche Telekom is jumping into Silicon Valley and saying, hey, we are here, we want to invest money. So I think there's a lot of still overseas money pooling in. It has slowed down. China, definitely, Chinese money has slowed down. But that hasn't impacted us, because like I said in the beginning, the VCs and even angels have a lot of money right now. But it's not, you know, I compare it to back in year 2000. You could spell Java and you would get $100,000. So I think last couple of years, the economy was becoming that way. But I think the correction is very correct. And I think because of this correction, you will actually see some very good companies shine out of it and really good investors come out of it. But where do they get money? That will be, I think, very interesting to see going forward. I think I predict that most of the startups will go to angels.
Okay, bear with me on this question. It's kind of a statement, too. Before I started Keiretsu Forum, I funded a company, myself and 3 other individuals, and the company grew to 28 engineers. And I walked in after a year, and I said, well, who's executing on the business? well, we're still trying to get it right. I go, but that is a DNA. So I'm not disingenuous. I'm not putting down engineers, but their DNA is different than my DNA. My DNA is about exit. My DNA is risking capital and then moving toward an exit. Hopefully there's a good return. They win and we win. But how do we get these engineers to think about sales and marketing is just as important of the great things they're doing?
That's $1 million question. I meet startups on a regular basis. I see at least 2 to 3 deals coming to my office on a weekly basis. My first question to these engineers is that, first of all, they're engineers. And coming from my background from India, engineers and doctors were always considered the high levels. And if you couldn't become an engineer and doctor, you could become anybody. So I'm that category of anybody, accountant.
So you're a doctor, engineer, and lawyer?
I wish I was. My parents would be very happy. But now, because I didn't make an engineer or a doctor, I'm happy, being the guy who's selling shovels to the gold rush people.
Right.
But to going back to your idea, I think engineers need to correct themselves. They are very intelligent people, but they need to stop and once in a while think that who's going to buy this? Where am I going to make the money from? How soon do I need to build my sales and marketing team? How soon do I need to get a business development guy involved? These are things that I think that early startup engineers who have brilliant ideas need to start thinking very soon, and especially in this day and age.
And I think a great litmus test for anybody that approaches you or me, I love, obviously, the jockey. The CEO has to have a track record. And it's very important to, if you have failed in the past historically, let us know, because everybody fails. This is a great place on earth. You can fail and still succeed. I love skin in the game. And again, if an engineer only has net worth $1 million, he's not going to have $1 million in opportunity. Hopefully he will, but I love skin in the game. You were approached this last week of 2 people asked you, 2 different companies asked you $100,000.
Yep.
Were they naive, or were they sophisticated, or were they just said, gee, we know you have a lot of money here? I mean, how did they approach you? And that's why I started Keiretsu Forum. I wanted to create a structured and disciplined approach. I was tired of being solicited. I was able to retire, and whatever you call retirement, transition into the next channel of life. But I was tired of being solicited, and so when they solicited you, were they naive? Were they sophisticated?
Both. So one was naive, again, very smart engineer, absolutely amazing smart engineer. He has a full-time job on the side. He developed this product, amazing product. Everything is great. But now he's been sitting on this product for 3 years. And when he came to even talk to me, he did not even have a slide deck. Like, he had the product running, but I was like, okay, do you have a cheat sheet? Do you have an idea? Do you have a one-pager? That explains everything on that. He had nothing. So those are the kind of engineers I look at and say, great idea, but go hire a marketing company. Go put something together. When you come to meet me or go to an angel investor, you will get in the door later on to show your demo and everything else. But when you need to send them a teaser, at least get a teaser right. Don't have spelling mistakes on a teaser. So that was one. And the other ones were, actually more sophisticated. They started a company. They were a part of a big startup. That company went IPO. They have money in their pockets. They came with the idea. They came to me. They had the presentations ready. They had everything ready. They actually told me that in the next 5 years, how much money they're going to make, how much money they're going to burn, the whole 9 yards. So I think those are few of them down there, but there are very few of them who've done it before.
Right.
So I think for Keiretsu or angel investors, I think you also see a lot of, and you can tell me on this one, you also see a lot of companies coming to you with ideas, but they have nothing to show.
Well, we have a whole process, but one of the processes we're important because we are a very gracious community. We want to introduce them to a champion that really gets what they do. So those 2 individuals that pitch you probably got it, but sometimes I don't get. I mean, for instance, of my 53 investments at Keiretsu, probably half of them I don't really get, but I found people within our organization, we're up to 3,000 individuals throughout the world that understand their technology. So number one, I feel a company that comes to us, we will want to introduce them to a champion, but they'll talk the talk, and that champion will then hopefully move to the next level, which is our committee system, and 95% of our deal flow gets rejected there. So be careful when you come to us. You have to find that champion that really understands you, and then more importantly, when it goes through the committee system, spend a lot of time with the committee. And for instance, we have 10 different committees. I chair one of the committees, which is real estate. So we'll talk the talk, and then we'll see or ascertain if it will resonate with our community, and then it goes through another process, which is our deal screening, which is 1 week before the forums, forums. 25 members only gather, and we select the company. So 50 down to 10, down to 4. Today we had a forum, 4 companies presented. And generally in regions, and we're around the world, regions, in Northern California, we fund 35 companies approximately per year. It can be less, it can be more. Last year was 34. This year will probably be for 38. But go through the process, be patient with us, but more importantly, find that champion and sync up with him. So if you're an engineer, I will introduce you to an engineer. If you're sales and marketing, I'll introduce you to that channel. But you got to come with revenue to us, because if we don't see the revenue, that's not our validator. So, and also, I started Keiretsu. I was tired of getting solicited. You get solicited a lot. That's why you need to send deal flow to Keiretsu. And if it passes Keiretsu, then you can invest in it.
Yes. Well, that's what I actually told all 3 of them, because I don't think the VCs would go into them, or they can go into VCs, because actually one can go to the VC, the other 2 because they don't have a track record. I actually sent them to Keiretsu and to angel investors and said, this is the right way to go for you guys.
Right. And there's a lot of great angel groups out there, and we have launched funds topping off our best deal flow, and we have now 156 limited partners in our funds, and those funds are designed for our angels when our members don't have time. But we also want to make sure we don't miss any great deal flow. So we've done deals with Band of Angels, we've done deals with Tech Coast Angels, Sandhill, and we want to continue spreading the joy. And also, while I'm thinking of it, Keiretsu Forum, the last 14 years, has created a book that's online or at Apple bookstores. It's free, and it's called Keiretsu Forum Due Diligence Book, a handbook, excuse me. And it details how we think, because getting back to how engineers think, they may think a little different than we think. Well, we are always doing due diligence to see the validation, to see, in fact, whether we should fund a company. But look at that, and it's free for you. I have not read it all. It's actually probably it's a gift from about 100 of our members over the last 14 years. I don't know if you've seen it, but it's fantastic. So we have 1 minute left. Any closing remarks?
I think the closing remarks will be that, the market is getting tough. Engineers are smart people again, and rather than wasting your time and going up and down sandhill, I think they should look into other alternatives. Most of these guys didn't even know that what's an angel investor and how to approach them. And my only 2 bits to them would be that put together your portfolio properly, and then knock at the right doors.
Right, and also they should go and view pitches. So if you're interested in pitching to us, come as a guest, sit in the back room and see how tough we are or how gracious we are, but learn how other people pitch, and then we'll help you and guide you through, obviously, the whole process. Well, it's been a real pleasure, and hopefully this next year, when you're back as my guest, there will be 25 IPOs, and the VCs will be funding more companies. But meanwhile, there's a lot of capital out there, both with angels, both with, obviously the banks are loaning money and also giving as the lines of credit. So thank you so much for coming today, and thank you for viewing Keiretsu Forum Presents.
Thank you.